One of the questions I always keep getting asked is that if markets were to fall, I would hold more cash. Um, See, fundamentally, I am not averse to keeping cash. Um, and cash is only to be kept while it is being deployed. Uh, the reason for that is that I think allocation calls have already been taken by my investor when he is given capital to me, and he expects me to give him best exposure to equities, and which is what my goal is. So unless we think that the markets are going to collapse 20, 30%, I don't see myself keeping more than 10% kind of cash. So and we can go horribly wrong on what can potentially happen on macro events, and so on and so forth. And based on that, we can't build a portfolio. We can't build a substantial part of our exposure around some of those macro aspects. So that's the other thing that I want to kind of highlight, that by and large we keep not more than 10% kind of cash, and the only reason for that cash also is that a lot of that cash is being deployed, but markets are illiquid and it takes time to bring from those positions. Um, and so while these positions are being built, there will be cash. Um, I also want to kind of highlight that it's very tempting to give a view on what's happening with the markets on the current environment, global, geopolitical, tariffs, and so on and so forth. But I think all of us have a view there. But I would say that most important thing is asset allocation and not so much some of these events. Uh,
So yeah, those were the points that I wanted to kind of make. I will stop here, and maybe we can move to Q&A.
Thanks, Chirag. Uh, Participants are requested to post their questions in the chat box, and we can answer them one by one. But Chirag, I also had couple of questions on behalf of the people where I keep getting on and off. One question is, while the process and everything has been very strong, uh, the performance always will make more noise. Like I was seeing last 3 months, you are in top quartile. You had certain patches where the alpha was very good, but then sometime it remains patchy. And second is you also have a disproportionately higher amount of small and mid cap compared to the other multi caps in the industry. So if you can just delve deeper into both of these questions, how should somebody uh, navigate these questions if somebody gets it from their clients?
Sure. Good you brought this up. See, this is the chart, Ankur, that highlights the alpha on a trailing basis. So the fund is about 12, 14 months old, 14 odd months old. It tells you how volatile alpha can be, right? And The narrower the period, the more the noise, right? And I don't think there is any scientific way of solving for this volatility. Um, Especially given that we are going to run this as a multi-cap naturally has much higher small and mid cap exposure, about 50% at the minimum to small and mid cap. And we are actually running much higher small and mid cap even versus that. So that volatility is here to stay. But I must highlight that that volatility is more mark to market and less uh, you know less so in terms of something worrying, etc.,
बहुत बार
right? So
हमारे से
simply
पीओएस की भी
because
पूछते हैं कि
equities
ऐसा
as
कोई
a
प्रोडक्ट
class
है क्या
gives you
जहाँ
an
पे एक
NAV
साल के
every
बाद 2 साल
day,
के बाद मेटर
we end up thinking that that NAV is actually highlighting or telling us something. It is not. So we've seen and when I put this letter out we were at we had already seen that rough patch that you were mentioning. We've now come back from that low, so this is going to be volatile. Volatility is here to stay, especially in this world where status quo is being challenged in the largest economy in the world. And the current uh, US president is actually challenging everything that we've believed in the financial markets over the last more than 2 decades. So when you have such a thing, there is bound to be volatility. One can expect that. Um, and I have no way of solving for that volatility. We are, there are some of these arguments. People say, why not move to large cap? Why not move to small? And so on and so forth. I think it's very, very difficult to time some of these things, to try and forecast some of these things and build a portfolio around it. So volatility here to stay. We should look at long term, and in the longer term, I think we will generate fair amount of capital appreciation.
Sure. The next question is from Mr. Anoop. He's asking, given the fact that multi-cap necessarily requires you to invest at least 25% of the fund corpus in the mid-cap space, and given you have also said there are certain restricted opportunities in the mid-cap space, how do you intend to navigate this challenge in the fund?
So today we have about 30% in the mid cap. So we are fairly okay there. Uh, you know, the context was really versus large cap and versus small cap. The struggle is more on the mid caps and not so much on the small and mid. And this is very contrary to popular perception that small cap may, there's a struggle and so on. I think small cap may there's a lot of breadth. Large cap may you can buy a lot of a few names and get done with it. That struggle is relatively higher in mid caps, and I think the only way to manage this is to evaluate more and more is to evaluate companies, get into details, and be a little more agile wherever money has already been made, and so on and so forth, and keep retesting our theses at every point in time, because these stocks can be very volatile. So that's how we're thinking about this. That's the only way we can manage this.
Sure. So a follow-up question to this is, won't flexi cap will be a better strategy than multi-cap in your honest opinion?
So, multi-cap is a more riskier product than flexi-cap, very, very clearly. And in that sense, for a less risk-averse investor, one should look at flexi-cap as a mandate. We've said this in our NFO literature as well, that over a longer period of time, on a 5-year rolling basis, the multi-cap index beats the flexi cap by virtue of having the higher small and mid coverage. But will it be more volatile? Most certainly. And hopefully that volatility will be made up for in higher returns. This is what has happened in the past. And hopefully the future should not be materially different, but it will certainly be more volatile. That I think is a message that I want to very clearly give.
Sure. There's one question that banks had a favorable risk reward ratio at one point of time. Is it still the case? And what is your current position in banks?
So, so I think some time back, banks were a no-brainer, right? I mean, at those valuations. Uh, and in that sense, where we sit here today, expecting another 50 basis points rate cut, etc. We need to now see the trade is not as easy as it used to be 6 months back. For us, the exposure is underweight on banks as a whole, just given that banks is a very large is a very large sector versus in the index. So most of our BFSI exposure is actually in banks, of course, large, but incrementally a lot of active share is in insurance and in capital market place. So yeah, banks not as easy as it was 3 6 months back. Valuations have turned out to be much higher than where they were 6 months back, and businesses are chugging along. So I think expecting earnings to surprise positively um, has not happened, may not happen either. So we need to see how this happens. But we are in the multi cap fund. We are underweight on banks as a sector.
Mr. Gokul had a question that do you intend to add international exposure in the fund in the near term future?
Not in the near term. Not in the near term.
Sure. The next question is from Mr. Vishwanath. He's asking that disregarding the near term volatility factor and for an aggressive investor, if we have to deploy capital now, is lump sum favorable now or you still recommend an STP?
Um, I think I would always go for an STP, just given that volatility is high. And an STP is always going to give a much better customer experience versus a lump sum.
Sure.
Especially in context of the fact that the markets have done well in the last 1 month. This if they wouldn't have done if this was a question, say 3 months back, somewhere in March or February, then I would have said lump sum. But I'm not sure if that at that point in time I would have got asked this question.
Sure. Sure. Uh, I think Chirag, that was most of the questions which we've kind of covered. If you have any closing remarks, you can probably proceed, and then I'll, make the closing remarks and close the call.
There are some people who are raising hands.
1 minute. Uh, there's a question from Mr. Ajit. Just you recommend a daily STP, monthly or weekly? Uh,
I have no way of answering this logically.
which
Depends on the on the customer's requirements, sir. Honestly, I don't have
sure,
an answer.
sure, sure. I think kind of we've covered most of the things, Chirag. Uh, you can just give the closing remarks, and
Sure.
I'll just you know close the call then. If you have
Sure.
anything
So
left,
in summary, I just want to kind of highlight that look, volatility is here to stay, and in the markets, volatility is here to stay, and of course, global geopolitical lot of stuff is happening. India is not operating out of an island. We are somehow connected, but relatively we are okay. And longer term, I think we should be okay. Here as well. So that's how we're thinking about this. But certainly, volatility will remain.
sure. So thanks so much, Chirag, for your time. Thank you, everyone, for your time. As you must be aware, whatever time frame he's been managing multi-cap fund, it is managed with a no style, way. And the you've seen some phases of alpha where you've seen some kind of drag, but he's been managing the fund with a very one more very different style of basket what we do manage in DSP. So if you need any further information, please reach out to your relationship managers. Please post anything on our social media. We'll be more than happy to answer it. Look forward to having you on many such sessions like this. Look forward to future sessions. Thank you so much. Thank you, Chirag.
Thank you. Bye bye.
Thank you.